Fine. The same way we dealt with GDP, that is understanding one concept plus a few provisions based on a scenario-based question. We'll be dealing the capital gains in the same manner. Like we'll be doing one scenario-based question from our study material, institute study material, and a few other provisions. So now, talking about capital gains, we first have to know what constitutes a capital asset for us to compute capital gains. So it says, the definition by itself says, property of any kind, whether used in business or not. Second is, securities held by foreign institutional investors. So the capital asset is an inclusive definition, or it's an definition which includes everything that is property of any kind. That is a generic definition. We have to check the exclusions from the capital asset. So first is stock in trade. Say land and building. Generally, it constitutes capital asset, whereas in case of a real estate business person, it is a stock in trade. So stock in trade cannot be constituted as a capital asset. Second, any personal effect. So anything that is for your personal use cannot constitute a capital asset. However, there are 6 exceptions to this general rule of personal effects. So if there are sale or transfer or any nature of transactions with these 6 assets, then it does constitute a capital asset. 1. Jewelry, archaeological collections, drawings, paintings, sculptures, or any work of art. And 2 other things which does not constitute to be a capital asset are rural agricultural land and certain bonds, the gold bonds, 6.5 interest gold bonds and gold deposit bonds. So a quick check, if a person has sold or alienated within himself the asset, that is car, which was used for personal use, does it constitute a capital asset? Obviously no, because any personal, as read before, does not constitute a personal asset, capital asset. Only the 6 exceptions general rule contains capital asset. So the next is short-term capital asset. So we are just going to do short-term capital asset part of this alone, so that any opposite of this will have will be a long-term capital asset. So first one, period of holding, 12 months. So there are 3 kinds of assets which constitute short-term capital asset if held for a period less than 12 months. Security listed in a stock exchange, a unit of equity-oriented fund (UTI) or zero coupon bonds. Next is 24 months, unlisted shares and land on trading or hold. So if these 2 assets are held for a period less than 24 months, then it constitutes a short-term capital asset. 36 months. What is a short-term capital gain or short-term capital asset in case of these assets for a period held less than 36 months? Units of debt-oriented fund, unlisted securities other than shares, and other capital assets. So if we see here, how do we compute rate of tax? Rate of tax is in 2 kinds. One is 15%, the other is government slab rates. So 15% is for STT paid asset, that is of first to nature. That is a security listed in recognized stock exchange or a unit of an equity oriented. Only if STT is paid. Can unexhausted basic exemption limit be claimed against this 15%? Yes, it can be claimed. Chapter 6A deduction is not available. Next, this is the format we will be following for all our capital gain chapter problem-based questions. So we have to read everything in detail, like based on each scenario, what constitutes a full value of consideration, what is the expenditure incurred wholly or exclusively in connection with the transfer. However, there is a specific exclusion which is STT. So for all these assets which is STT paid at the reduced rate of transaction is available. However, we cannot consider this STT paid as an expense for computing the capital gains. So So there are few exemptions available under section 54 for the capital gain. Again, we will see this when we see a scenario-based questions based on the exemptions available. However, two specific exemptions against available against short-term capital gains are capital gain transfers of agricultural land, capital gains on transfer by way of compulsory acquisition of land and building of an industrial undertaking. So we'll see based on a scenario based yet another how to claim and what cases we can claim. What are the conditions attached to section 54 for claiming exemptions? So as told before, expenditure, say on sale of a land or building, there might be a commission or brokerage paid to a person that can be considered as an expenditure incurred only or exclusively in connection with the transfer. However, STT is not allowed as an expense. So as told now, we deal with one scenario-based question from our study material. So here is an example where the goods lost or destroyed during a fire accident has been paid by the insurance company. So how to deal with such a scenario? Mr. A is an individual carrying on business. His stock and machinery were damaged and destroyed in a fire accident. The value of stock lost was 6,50,000. A certain portion of machinery would be salvaged. The opening WDV of the block as on 1/4/2018 was 10,80,000. During the process of safeguarding the machinery and in the process of firefighting operations, Mr. A lost his gold chain under diamond ring, which he had purchased in 2004 for 1,20,000. And then they have given us a list of all the three assets which were damaged against which the insurance claim was received. So, starting with an answer, you can deal it in two ways. Make a table, deal with each asset, how it should be treated while computing the capital gains. So, first point of consideration. So when we read the capital asset definition in specific, there was an exclusion which was stock. Stock cannot be a capital asset. So any claim received against it cannot be a capital gain or capital in nature. So this should be charged to our P&L. And any income to be included here, that is the insurance amount received against the stock will be an income from PGBP, and any loss on account of damage or destroyed stock here, that will be charged to our P&L. That is 4,80,000 will form part of our income in income and expenditure account or P&L account, and 6,50,000 will form part of our expenses in the P&L account. Second, with respect to total damages of the machinery, that is amount received against this is 6 lakh. However, WDV is 10,80,000. Any gain, capital gain from sale of machinery on which depreciation is being charged is deemed to be short-term capital gain irrespective of the actual date, which we'll see in examples we are going to see in further videos. However, here capital loss is 6 lakh, which is full value of consideration for the computation minus the cost of acquisition. That is WDV as on 1/4/2018, which is 10,80,000. Difference between these two will form part of short-term capital gain. Third category is towards gold chain and diamond ring. As we told before, the exception to the personal effect, there are 6 assets. Jewelry is a part of that. Therefore, gold chain and diamond ring will form part of our capital asset, and capital gain should be accounted for the same. Here, though they have given the cost was 1,20,000, we are not aware of the indexation rates. So this being a long-term capital gain, indexation will be available, and we can calculate long-term capital gain based on the same. So there has been past few exam questions for 4 to 5 marks again independently or as a part of total income chapter again. However, there can be scenario based question as we saw before.
testing a specific area, whether we know how to calculate full value of consideration in that specific scenario, or how to calculate cost of acquisition or cost of renovation in that particular scenario. Say 50C, we'll have to find full consideration. So we'll have to check each scenario and apply that. And regarding the presentation, it's better if we follow a same format. That is, we practice in the same format for our next 2 months of exam preparation and apply the same in our exam, so that we'll be confident about what we are writing, the format in which we are following, and also it should be understandable to the examiner and make his work easy, so that it is easy for their correction and easy to score marks. So all the best for your exams. Thank you.